few days is try and get in companies wherein we may not have had a chance to talk to them during their earnings because it's just a lot of companies, but either the con call or their numbers or their guidance has something interesting in them. And I can tell you that the management of Moldtek Packaging, when they did the con call, have given some very interesting thoughts around what could happen to business going ahead, particularly with the new vertical of sorts that they are now working on, which is pharmaceuticals. So Mr. Janumahanti Laxmana Rao, Chairman and Managing Director of Moldtek Group, joins us right now on the show to talk about all of that and more. Mr. Rao, good having you. Thank you so much for taking the time out. This is Neeraj here. Good afternoon. How would you characterize what's happened in FY25 and how does that take you ahead in FY26, Mr. Rao?
Yeah, 25 is a stabilizing year where all our newly created assets, almost 400 crores we invested in the last 3 years, which was equivalent to 30 years of our investment in the past. So these 3 years are a huge investment platform we built up for Aditya Birla Group and a foray into pharmaceuticals. I'm very glad to say that the year ended, though at 8 to 9% volume growth, it paved the way for future faster growth. We are already witnessing that in the Q1, and I'm confident that the going years will be in mid double digits, somewhere around 12 to 15% volume growth for sure, with improved EBITDA margins.
So, Mr. Rao, also, of course, tell us, okay, we'll come to the numbers in a bit, Mr. Rao, 12%, 15% volume growth. We'll keep that at the back of our mind. But first, what will drive this? Because the existing categories, which is paints, etc., there is not so much of a demand buoyancy that we see per se, at least as the way we think. Is it the newly established or newly launched pharma division which will drive this overall growth? And tell us a bit more about what is it that you're doing in pharmaceuticals.
Okay. Yeah, the growth platform comes from mainly pharmaceutical to start with, but also ABG volumes that have been created, capacities that have been created last year are getting better utilized in the current year. And pharma is a very heartening positive for us. What we started just a year ago as broke even in the fourth quarter itself with a decent profitability, reaching around 6.5 crores of revenue for the quarter against nothing a year ago. So closing the full year at about 11 crores, half of it, more than half of it coming in the Q4. That's a good sign because this will now multiply 4 times at least in the coming year, because all these pharma orders are also sticky orders, and we hope to cross 30 to 35 in the bracket of 30 to 35 crores turnover in pharma from 10 to 11 crores last year. That's just a beginning, and even 30-35 crores is no big deal because it's hardly less than 1% of the overall demand in the country for both exports and for Indian market put together. It is not even 0.5%. The overall market is somewhere around 6,000 to 7,000 crores per annum, the packaging alone. So in that, even achieving 30-35 crores is minuscule, but it's a good start because generally companies take a couple of years to accept a new packaging vendor because of the stability tests, because of the quality concerns and online trials and whatnot in the pharma industry. But I'm glad to say Moldtek could cross the barrier within 3 quarters and delivered positive results in the fourth quarter. And more heartening is more than 20 companies have approved our facilities. They're made of world-class facilities at our Sultanpur, Hyderabad plant. And those plant operations produce not only the standard bottles and caps, but also variety of products, canisters, effervescent tubes and caps. And now we are developed holders, and we are developing various new products for the pharma industry. What is more heartening for us is, apart from just getting the bottles and caps business, we are able to drive new product development, which is a very time-consuming thing in pharma packaging in the country, whereas Moldtek could cut the delivery periods from 4 months to almost 1.5 to 2 months, and thus becoming a useful vendor for pharma companies going forward.
Okay, so this is Harsh also joining in. I want to unpack this a little bit more. One, there's going to be pharma, which is likely going to drive growth. But again, as you correctly said, it's going to be a very small component of your top line. So where is that growth going to really come from, and what's the kind of number you're targeting maybe next year as well as maybe over the next 3 years? Take us through that journey, and what does that do to margins? Because capacities are now built, as you correctly said. What does this do to top line and margins? Give us that perspective.
See, the overall asset turnover ratio is not even 1 as of today. It has to go up to 1.3, 1.4 level on the average, because in paints we achieve even 1.7. But in food and FMCG and pharma, it will be in the range of around 1.2. So easily it is reachable up to 1.4, 1.5 as the overall company average, which is currently hovering around not even 1. So crossing 1.2 this year and probably hitting 1.4 next year, that's 26, 27 is the target. But however, there will be new capacities will be added again, because pharma, as I said, hardly contribute even at 35 crores, 4 to 5% of our top line. But that can still have a potential to grow to 15-20% of our top line in the next coming 3 years, because the area is very wide, and as we enter and have the credentials, the numbers what we can add in that field is phenomenal compared to paint and loops, where we have our position for last several years, more than 3 decades. So in the pharma, we see the numbers shooting up year by year. I can't predict at this stage, but I will be really disappointed if we are less than 100, 120 crores after 3 years in coming from pharma. And the growth area coming is also from thin wall and food and FMCG, where last year we had a tepid growth of less than 10%. This year, we managed to cross 14.7% overall growth in terms of volumes year on year. So that is a good number, and we foresee that it may cross even 20% next year, because basically our Panipat plant, which is in north, will be starting manufacturing these food and FMCG products starting from June. In fact, Hindustan Lever's detergent pack production started there already 2 months ago, though it is not a food, it is a FMCG product. Food products will start from June, middle of June or end of June, and that will contribute handsomely. Whatever it contributes will be an addition to the food and FMCG. So we are looking around anywhere close to 15 to 20% growth in food and FMCG. Paint industry is also growing good, because the APG numbers are ramping up, and thanks to Asian Paints adopting more and more IML brands, we also stand a chance to grow with them. And overall picture in all these 3 segments look good. Lubricant is always a stagnant line for us. Hardly we find plus or minus 3% growth in that segment. The remaining all segments are showing at least around 10 to 15% growth, which can pull up the company's numbers in the coming years.
What does that do to margins, sir, if I were just to follow that on with margin outlook?
Yeah, you might have already noticed that we crossed our benchmark 40.2, I think somewhere around 40.2 per kg EBITDA we crossed after several quarters, after maybe 7-8 quarters,
right.
Dropping EBITDA from 37, 38. Today we are at 40.2, and I see that coming close to 42 in the current financial year if the growth plans go as per our targets.
No, but okay, so that Mr. Rao, that would be the gross margins or per kg EBITDA. When I look at your reported EBITDA, which investors will be able to look at, right? For example, in March 22 or FY22, you did about 19% operating profit margins. March 25 or the year gone by, you've done about 18% operating profit margins. So what do the operating profit margins behave like in the next couple of years?
Yeah, profit margin dipped from 19.5 level to 18.5 in the last 2 years.
Yes.
And now currently in this particular quarter, that is Q4, we hit again 19.3. If you look at quarter in 11. And if you look at in future, EBITDA margins of pharma are in the range of 25 to 30%, depending upon the product mix. And food and FMCG always are around 24, 25. So these numbers growing faster than the pale segment. Hopefully this should now come close to 20% in the 1 or 2 years time.
So you are saying that in 1-2 years, while you grow volumes in 13 to 15% range, that will be accompanied by margins maybe touching the 20% mark.
Yes.
Okay. And if the volume growth is 13 to 15%, console with all the businesses coming in and various kind of pricing that you may have, what does it translate into overall revenue growth, sir? You think you can do 20% CAGR revenue growth, reported sales growth, or could it be higher?
No, the revenue growth would continue to be in the region of 12 to 15% CAGR. Probably 15% is possible. I'm not counting on the raw material price fluctuation, keeping the volumes as the base always. So volume-based growth will be in the region of 12 to 15% for next 2-3 years. And at least double that should reflect at the bottom line.
Double that. So you're saying 15% revenue growth, maybe 30% PAT growth.
Yeah, 25 to 30% PAT.
25 to 30% PAT. So people believe that you might actually nudge profits of about 80 to 85 crores in FY26 and maybe 110 odd crores in FY27. Are these realistic estimates, sir?
Yeah, they're good estimates, optimistic, I would say. Not very easy to achieve, but we are aiming that.
You are aiming for that.
What I said, 25-30% growth is what we certainly see is a realistic one.
Okay, just one more follow-up from my end, Mr. Rao, and that is on cash flows. Your cash flows have looked very solid. Is it because companies are paying on time and because you are supplying to the organized industry? And does that remain that way? Your cash flows, will they match your profitability, if you will?
Yeah, our cash flows are always good because touchwood, all our clients are top class clients in any industry you touch. You name Castrol, Mobil, Shell, Exxon in lubricants, Asian Paints, ABG, Kansai, Narolac, Berger Paints in paint industry. You look at food and FMCG, we have.
Sir, is it the same in pharma?
Yeah, even in pharma we have MSN, Marksons. There the payment periods are a little longer. As you all know, pharma pays 90 days plus. So there it might pull up our working cap requirements a bit. But being a small contributor as of now, that wouldn't impact our working capital and will not impact our cash flows. We continue to have decent cash flows going forward.
So explain this to us, Mr. Rao. You've got this large capex which has come on stream. You have very, very strong demand which you've spoken about. Why just 12 to 15% growth in terms of volume?
See, I wish to do 15 to 20%, but I would like to be, realistic and talk to the markets what is definitely is possible, and hope to do better.
Sure. So the guidance, sir, therefore is more conservative, is what you say, and so
let's say realistic.
Sure. Okay. We'll stick with that. And sir, just tell us about what the future capex plan looks like. How quickly does this capacity get maxed out, and when does the next round of capex come on stream? Just give us that perspective.
It's ongoing, in fact.
Okay.
I would wish to control, but already we have committed more than 60-70 crores in this year also, as of today. Because pharma, we are again enhancing our capacity, adding 7-8 machines in the current year, taking it from 1,500 tons to 2,500 tons by end of this year. And already we procured a land adjacent to our unit, very adjacent, 2 plots away. For 2.5 acres of land, we have been just sanctioned, spending about 11-12 crores for the further pharma growth, because the space is required for future, and that land has been acquired recently, and the payments are yet to be made. A sanction letter has been received from the Telangana Industrial Corporation, and so investments would happen, but not to the tune of 140 crores you have seen in the last 3 financial years per annum. It may come down to 70 to 80 crores this year, mainly for pharma, because we need to expand and create capacities as we add clients. Today we have at least 20 approvals, only 5-6 of them are giving the orders, and remaining people are in trials and trial lots, stability tests. And another 20 more new pharma companies are visiting us in the next 3 months, 10 to 15 companies, of which at least 80% of them will approve because of our world-class facilities and standards and our ability to make molds and maintain the molds. For example, I was telling in the con call also, everybody is using a 15 gram 200 ml bottle. somebody needs a 17 gram or a 13 gram. And for our competitors to make those cores or change parts takes a couple of months. We are ready in a couple of weeks. So that is where we will be able to submit the samples faster and get the pharma company also move forward with their end clients. So that strength is what I see is going to help Moldtek to grow in pharma. So further investment of at least 40 to 50 crores I envisage in this year on pharma, and the rest is balancing equipment for our regular pails and food. Food is another area because in Panipat we are starting in a small way. In a 20,000 square feet area, we are setting up 6 machines, but that will be definitely inadequate, and we'll be needing another 6 machines at least by the season, that is March next year. So food and FMCG would also require around 25-30 crores of investment. So I think we have budgeted 70-80, but we might cross marginally even that budget.
Okay. Thank you so much, sir, for coming and speaking with us. New vectors of growth is what looks interesting, and that's likely what stood out for both of us as part of this conversation.
The thing also, Harsh, is that one, that they are growing at a good rate with a new vertical, but the cash flows are looking very strong. Usually companies tend to get stretched on the cash flow front. Here, that is not the case.
Yeah, in fact, when I was just looking at the PAT to cash flow ratios, it's looking very healthy in that sense. So yes, for sure. So that number looking good. But you know what we'll do? We'll slip into a very short break. But before that, let's quickly go across, because we were present at the sidelines of the Marcellus India Wealth Survey 2025 event. My colleague Pallavi